The Wealth Priest here. I salute everyone watching this video, and yes, this is my first video content. Save the short I posted a while ago. This is my first video actually, and I feel so pumped to be on this space and to provide maximum value for you. And in this video, I'm going to be giving out probable and possible directions of the market for the week, for the dollar index and for the GBPUSD, while I also use EURUSD for SMT divergences, and I'll be using the concepts I learned from ICT, Michael J. Huddleston himself, my mentor. So if you've not subscribed and liked this video, please subscribe and like this video, because it's your way of encouraging me to do more and provide more value for you. Okay, so if you stick around to the end of this video, you're going to learn strategies and tools you can deploy in your trading to help you become efficient and profitable in the markets. So GBPUSD, the dollar index, and EURUSD. Let's get right into it. So first of all, I love to consider the GBPUSD first. I love to, because it's my favorite pair and I love trading it. So it's usually the first I look at. So the first thing you do is to look at what the market is saying on the larger time frame, that is on the larger context. So for me, it's sometimes the 6 months, it's sometimes the 3 months, but for this video I'm going to be using the monthly instead. So we've had the market on a bearish order flow. And how do we know that? The market has been forming lows and then breaking new lows all the way much lower. All right, so we're going to deal with this pocket of data here. We're going to be dealing with this particular pocket of data here. So we're not looking at anything aside from this. So we have the market forming new lows, and then this was the last low, or this was the most recent low, and then this was the most recent high. And then we understand, if you understand the four concepts, the four aspects of four elements of price delivery according to Michael, there is a consolidation, there is a reversal, there is the expansion, and then there is the well, for this, let's just deal with the reversal. I think I just forgot the last one. Okay, so we've had the markets on a downtrend from this high here down to this low until we experienced a reversal, and it's as a result of what? Price taking out liquidity from this low here. Okay, so price took out liquidity from this low, and then once it did, we saw price leave from a discounted area and is probably heading for premium. Okay, so you understand that price moves from what? Premium to discount, and from what? Discount to premium. That is just how the market moves. All right, so the next thing you actually do is to think in terms of where price could probably reached for. And that is how Michael, my mentor, would say, what could price reach for? What could it possibly reach for? Then if we look at the market here, we find that the market is in an uptrend here. This is on the monthly time frame, don't forget. So we find that the market is in an uptrend here, and it is probably reaching, well, it has taken out these highs here. It is taken out. Okay, let's begin from here. From this point here to from this low here to this high here, looking at this, considering, so from this low here to this high here, we understand that price here has moved from what? It moved from a discounted area to a premium area. And how do we know that? At first, I use the Fibonacci tool here to measure. So once you measure out this price leg. Now you see that price came into a premium. Understand that above 50% is always premium, and below 50% is what? Discount. So we are looking at this price leg because it's the most current price leg for us to consider in the market. It broke structure and it's in alignment with the current order flow of the market, which is what? Bearish. And if you stick around for long in this video to the end, I'm going to also I'm going to tell you more about my mentorship services, my premium mentorship services, and for those who want to join my signal services where we trade gold and we trade the GBPUSD as well. If you probably stick around, I'm going to tell you more about it. So let's continue. So this price leg is what we are considering, okay? And then above 50% of this price leg is where we consider as the premium, and then below is where we consider as the discount. So what could price probably reach for this month? Now this is how to look at it. I know we are looking at the weekly probable weekly direction, but let's look at what price is doing on a monthly basis. And what is price doing on a monthly basis? So first we had what? Price from this low here, okay, from this low here, which is the previous month's low. Then when price came into premium, there was a reaction from this level, and then there was a period of consolidation in the market. So all of this was a period of consolidation in the market. And what would you expect? What would you likely expect in the market? So from consolidations we move towards expansions, or from consolidations we move towards reversals. Now from this consolidation, we'll likely be expecting to move into what? A further expansion. You know how the market moves, okay? So we have first the impulse, and then we have a period of consolidation, and then we have another impulse. But in most cases, we are likely to see a reversal. But following what the market is doing at this particular point, so you see the market is probably it has formed an impulsive leg here, and then we have a consolidation. It is more probable to think in terms of price expanding more. Well, it's also possible that price could continue, it's fall all the way down from here. No, but for me, in my opinion, I believe the price could further be reaching into premium. All right, so for me, I would think in terms of where price is probably reaching for, and price actually moves. Price is more attracted to imbalances and levels of liquidity in the market. So in this price leg, what is the most probable level or premium level here that we are currently looking at? Now we have the 50% here, and then we have the 61.8% here. And now if you look at this 61.8, which is a premium level, we have a level of imbalance here. Okay, we have a level of imbalance here. We have other imbalances here. We have an order block. But it would make more sense. Of course, you are not a market maker, and I am not a market maker either. So we try to look at what price could just do, within a reasonable amount of time. I'm not among those traders that try to give what the price could do much later in the future. No, I try to sit with what price could probably do now, because I'm an intraday trader and I'm a short-term trader, so I don't really look so much at what price could do, over 3 months, 5 months, or no. I don't do that. Okay, so now price could probably reach for this level of imbalance here. Okay, so that is what I'm looking at, this level of imbalance here. All right, so now this level of imbalance becomes our point of reference for what price could probably do on the monthly time frame. Now something else I love to plug in on the monthly chart is the monthly opening price. Okay, so this is the month of April. Okay, so at what price did it open for this month? Because it's going to serve as a point of reference for our timing. Remember the time and price elements of trading. Time and price elements. So this is the month, and then we're going to look at the opening price. So what price did it open at? So it opened at let's look at this OHLC figures here. So it's opened at what? 1.23250. So we're going to edit this. We're going to edit this 1.23250. All right, so going to 23250. Then we're going to switch the templates to the monthly opening price, and then that's it. So now we have our monthly opening price, which is going to serve as a point of reference for what price is currently doing, because above it is what? Premium, and below it is what? Discount. So above it we're going to be looking to sell more, and below it we're going to be looking to buy more. And trust me, it's a very, very, very powerful tool in determining your current position of time in the market. All right, so I'm going to pull this off. Sorry, I should be touching this instead. All right, good. Now we drop down to the weekly time frame. Okay, now the weekly time frame opens up things for us. Okay, and I love the weekly time frame, because why? This video is about looking at the weekly market outlook. So it would make more sense that we are looking at what? The weekly time frame. All right, so what are we looking at on the weekly time frame? So first, we're coming from a level of what? We just grab liquidity from this point, from this low here. So we just took our liquidity here, just took our liquidity from this low. And remember the movement, price moves from what? Premium to discount, and what? Discount to premium. All right, so it would make more sense to understand here that price is at a discount, right? So what is it likely reaching for? What? A premium. Now we remember we're on the weekly time frame. All right, so what are the premium levels for us to look out for here? Now I can see two here, and first we have what? This relatively equal low highs here. Sorry, we have this relatively equal highs. Okay, I used to go further to put in the exact figures, but for the sake of this, the video's length, I won't do that for now. Okay, so this is the weekly time frame. So it's probably reaching for this relatively equal highs here, and also we have this level of liquidity as well, which is the previous week's high. Now, one of the things I am doing now, and I want you to understand and learn, is that I'm building a liquidity grid. Now, this is one thing I do in my trading very much often. I build my liquidity grid because they are going to help you in terms of what price is probably reaching for. So always learn to build your liquidity grid, because the market is always reaching for what? Liquidity, reaching for what? Imbalances. I just hope this video is going to provide a lot of value. And if you've not subscribed right now, if you've not liked this video, please do so. Encourage me more by doing more. All right, to do more. Sorry. All right. So now this is where we currently are in the market. So I also go on to put in the weekly opening price, but in the first week of the month, I usually don't put it. Why? Because we have price, but it's basically the same week. Okay, so that is what we currently have now. So the monthly opening price is going to serve as both the monthly opening price and then the weekly opening price. Okay, yeah. So then the next one is the daily opening price, which is where I love to dwell. All right, so I prefer staying here. Why? Because it's the daily opening, it's the daily chart, and I trade intraday, and it would make more sense for me to stay to look at the weekly and then drop down to the daily. Okay, the more higher time frame narratives you have for a trade, the more probable the trade. I just want you to understand that. Okay, so now let's look at it now. Now we have price coming from this level of this discounted level here, and then price is moving in an uptrend. All right, so this point of reversal, okay, let's look at the most recent low and then the most recent high. So this is the most recent low in the market, then this is the most recent high in the market. Okay, now I want you to look closely at this. So this is the most recent swing low, and then this is the most recent swing high. Now these two reference points are very, very important to us. Why? Because this swing low, tells us, one, it gives us the idea of what the market is currently doing. So for it to have formed the swing low, now you know that the swing low it's called a swing low because it has two higher lows by its side. So we have this higher low here, right here, this higher low here, and then we have this higher low here, and then we have this. So one, it gives us an idea of where the market is coming from, and the market is coming from a previous level of discount, and then it went into a premium, which is this high here. Okay, good. Secondly, one of the things the swing low will do is to give you an idea of where to draw your reference points from. So if you want to measure where the price is in terms of premium and discount, you do that from the swing lows and then the swing highs. All right, so now let me take this off. All right, so we had price move from this swing low here to this swing high, and then this reversal occurred as a result of what? Price taking out liquidity from this high. So I want you to understand that price reverses after it has taken out liquidity. Price breaks out from a consolidation from its 50%. Price expands from an order block, or price expands from an order block, or a level or a fair value gap, and price retraces from an order block or a fair value gap. So we have from this swing low to this swing high, we have this impulse, and then price reversed after it took out this high, and then is doing reversing now. Is retracing now, not reversing per se. Okay, because we have a major point of reference to look out for in terms of price currently reversing from the market. Okay, now we'll be looking now at where price is, this retracement currently is going to end. So we're going to be looking at, let's plug in our fib to see where we currently are in the market. So we are at discount now. Price is currently at discount, and then we have the next level of expansion to begin from an order block. Remember, that is what I just said. So expansions start from order blocks and or retracement from levels of imbalances. So now this order block here is going to be our point of reference now for what might probably happen today. So we plug it in. All right, now remember we are on the daily chart, and whatever we are doing here, we are thinking in terms of what price could do today. And so we have price what we have this particular candlestick here, this particular bar here, signifying both the monthly opening price, the weekly opening price, and so it's also going to serve as the daily opening price, not the New York midnight opening price. The New York midnight opening price happens later in the day. I'm in Nigeria, so my time zone is the GMT +1, which you can see here, the GMT +1, and that is for me it's the 5 o'clock. It's 5 o'clock a.m. whereas for the people in the West, I believe it's 12 o'clock midnight. All right, so it's not yet 5, it's still around 2 a.m. by my time. So in a 3 hours time, then I have my New York midnight opening price, which is what is going to serve as the best time element for the day. All right, so now this other block here is going to serve the level of reference for me. It's going to serve as the level of reference for me, and I expect that price will do what? React from here, even though it might not reverse today, but I expect, okay, we work with an anticipatory mindset. So my anticipatory skills here is that what price is going to react from this level, this other block here, and then we'll begin its move. So I want to introduce you to something. Remember, just like I promised, I'm going to be teaching you more things, like aside, in every video I'm going to be posting, I'm going to be telling you things, not just what is relative to that video per time. I'm also going to be teaching you other tools that you can use to that when you deploy in your trading will help you become profitable. So there is the power of 3 method. Okay, so it's actually a sound trading trading model for many people, and I use it and I deploy it in my trading. So when we have, let's assume this to be the opening price for a day, for a week, and for a month. So once price opens at a particular level, okay, remember, price does what we call a judo swing. Okay, price does what we call a judo swing, and then once that judo swing, one price does the judo swing, the aim is to shake off retail. Okay, it's shake off retail traders, and then once it does so, it forms, now if it's going to be a bullish expansion, it forms what? The low of the day, or the low of the week, or the low of the month. Then it does what? It expands higher and then closes bullish. Okay, so this is for the this is the power of 3 for a bullish expansion. And so let's assume that it's going to close bearish. Okay, we have a bearish expansion. So we have what? We have the open, and then we have price from the high of the day, or the high of the week, or the high of the day, of the month rather. Then price does what? Comes, expands lower, and then forms what? The close. Now let me take this off right now. So I believe you understood that. So now we've done justice on the daily chart. Now let's look at what price is doing on the 4 hours chart. Now okay, now we have this, remember the price leg we are considering, which is the higher time frame, which is the daily. Our higher time frame price leg we're considering is from this point, from this low here to this high. So every other thing in between is what we call the internal range liquidity. So we're not going to be looking at buying from this imbalance here, because it's a false, and then you can see how price is taking it out. And then we're also going to look at buying from this other block, or this other block here, or this other, or probably this other block here. But no, we're not considering that now. Of course, in later videos I'm going to be teaching you how to trade flip order blocks, also known as flip zones, but I call it the high resistance liquidity switch to the low resistance liquidity switch. Okay, so that is what, of course, it's going to come up in later videos, but that is not the emphasis for now. Okay, so this, we are looking at this low here to this high. So every other thing in between is what we're going to be considering as what, as the internal range liquidity, and we're not going to be looking at that. So same thing, the 1 hour, the 1 hour. So what do we have here? So we just opened up price, open price up more. All right, and then all the way down to 15 minutes, where I usually execute during the day. Okay, so there is a very high chance that price could continue going down. So for now, we have price in a downtrend. Sorry, we have price in a downtrend, and of course, for now, we don't actually play the trend is your the trend is your friend game. No, we don't do that. We actually work with what price is currently doing. Then you can see that price is currently reacting from this imbalance here, and there is every possibility that price could go all the way down, considering also the session. So for now, we are in the Asian session here in Nigeria, and we don't look at trading from trading during the Asian session. So this is our these are our probable trading times, of which for me it's the London session here. All right, so next thing, I get back to the monthly, and then I look at dollar index. All right, so the dollar index is my baby, and I really love it so much. So we look at where price currently is coming from, and we think in terms of where it could probably reach for. Okay, so price is probably reacted from this level of imbalance here. Okay, so, and we understand that it's a premium. So what could it likely be reaching for on the monthly chart? So now let's look at it squarely. Let's look at it in terms of the premium and then the discount. So now we are coming from a premium level, and then what are we likely headed for? A discount. Now to further show you how algorithmic price can be, you can see how that immediately price came into a discount. What did it do? It reacted immediately. So now price has taken out. To further explain this, you see price took out liquidity from these highs, okay, which is a premium, leave coming out from a discount, taking out liquidity from these lows. Now, are you seeing why it's so important to build your liquidity grid? Let me stand so you can see. Okay, so now you see price took out liquidity. Now are you seeing discount next, premium? What do you think should happen next? Premium, discount. All right, so it makes so much sense to read price data. I just need you to take note of this. So we have premium to discount, and discount to premium. Just always look at price in terms of this. Now, okay, so we have price moving from this premium here to a discount. Okay, now what are we going to be expecting now? Where is price likely to reach for? Now, below the 50%. Now, do we have any what do we call that now, any reference point now that price could potentially reach for? Now we have this other block here that has been taken out. The other block was served as an internal range liquidity and as a trap as well. Okay, So what are we looking at here? We are looking now at this level of imbalance here that could get rebalanced in the month. So we have price moving from what? A premium. So price is likely to reach for this level of imbalance here. Now dropping down to the weekly chart. Okay, now we have price having taken out this high. Now we're most likely going to be expecting that price will do what? Let me take this off. We're most likely expecting that price will do what? Come and then also do what? Take out this low here. Okay, so this is our expectation. So we have price on the weekly chart. Price has been, for the past 3 weeks, price has been on what? On a downtrend. Okay, and we were expecting that price to do what? Anticipating another bearish close. See, it has been for the past 3 weeks after leaving premium. We've had bearish closes for the past 3 weeks. So price could we have now, if you also look here, you see we have a higher low forming, so which means that price could form a little bit of a retracement this week, or could continue its downtrend much lower to taking out this low. Now we don't know how far price can reach. We don't know how far. Only thing we do is we try to anticipate, but we can't tell. We don't know. We don't push the buttons. We have the big guys, the big dogs out there who are the ones who push the buttons. Okay, so we don't do that. We just anticipate, and then we trade in the line of our highest form of probability. So looking now at the daily, which is where I'm going to dwell a little bit for now. So let me take off this Fibonacci, and then this is where our dear EURUSD is going to come in, because we're going to be looking at it for some level of confirmation and also some level of divergences. So now we have price taking out this high, okay, and then we most expect that price will do what? Take out this low. All right, so let's look at what it's like on the EURUSD. Now I'm not going to go to the monthly. No, I'm not going to do that for now. So of course that EURUSD, let me just give you a little background story here. So EURUSD is negatively correlated to a dollar index. So what that means is that price, if we have a higher low forming, on EURUSD, we'll have the opposite, that is the lower high forming on the dollar index. So while we understand that price took out a high on the dollar index, remember, you see this is, let me plug in this particular line here so you know the exact. So this is the low we are considering, and the low formed on the 6th of January 2023, whereas we also have that same timing on, which is this high here that formed on the 6th of January 2023 on the dollar index. Now notice something. This was a high that formed on 6th of January, and then you see that on the dollar index, price came and then took it out. Now let's look at what happened on the EURUSD. Now you see that price came. Let me move this a bit so I can draw the low for you to see. Now this is the low. Now are you noticing some form of divergence now? So price came and then didn't take out this low. Are you seeing the form of divergence we are having here right now? So while we have a higher high form on the dollar index. On the EURUSD, we had a higher low. Now this is a very important aspect of divergence to look out for. It shows that smart money are in play here. Okay, so it shows that they are the ones playing the cards here. When we see divergences like this form in the market, it just so means that smart money is in play. All right, so now looking further at the dollar index, so you see now that price took out liquidity. Now when you want to understand divergences, you understand it, you look at it in terms of what price is currently doing. Now if we have price in a downtrend, it will only make more sense to rule out a divergence in terms of what it has done. So what did it just do here? It took out liquidity. So this is a very high probability way of looking at it. So it took out liquidity. What do we expect then? We expect that it would sell, right? We expect a reversal. So because what it did was, what it's doing now is reversing. And personally, and just as my mentor teaches, you trade in the direction of that sell, bearing in mind that price took out liquidity. So you trade in that direction. Now it's when you consider it alongside what it is doing here, what it has done here, you see that, of course, if we're looking at the correlation, we'd expect a low to form and then price to keep on going up. But you see, now the divergence here is going to help us to understand that if it took out liquidity here, the next thing to expect is price to take out liquidity on the opposite end. Now are you seeing how to build this form of logic around your trading to help your confidence, to help boost your confidence, and to help boost your psychology alongside? All right, so on the dollar index, remember on the daily chart where we have what do we call it, or what do I call that now? We are looking at an order block on the GBPUSD. So in relation now, which is also, I also want you to understand that it's in negative correlation to the dollar index. So if we're expecting a bullish move coming into the market, okay, of course it would make more sense for us to expect a bearish move to step in the dollar index. So where are we looking at? What reference points do we have for price to reverse from? So first we have this high here, we have this high here, and next we have we have this level of this gap here that just got rebalanced. So it got rebalanced, but for now we're not really seeing so much of actions. So let me drop down to the 4 hours. Okay, so we're not seeing much action for now in the market. But then we have this order block here that could probably serve as a level of rejection for price. But for me, my most probable level to actually to serve as a reference point will be this high, which is what I would expect both in our academy. Okay, so in the academy, this is where I'm going to be looking more at to be our level of reaction, and price taking out liquidity and then reversing. So I believe that I've done justice to these pairs, and I personally look forward to your feedbacks. I personally look forward to your comments, and as a way of going further in my provision of value to you, comment in the comment section what you would want me to put out more on this space. let's become friends. You can also reach out to me. There's going to be links. I'm going to put out links in the description below, in case you want to inquire about our mentorship services, our signal services. So check out the links in the description below, and I'll see you right in my DM. There's going to be my WhatsApp links and everything. So comment on the next videos you want me to post about, whatever you want me to teach about. I'm here to serve you, and I will much love to provide more and more value to you. Thank you very much for everyone who stuck around to the end of this video. I love you guys. Peace.